Okay, thank you everyone. Hello for coming and being here today with Blockchain Málaga. This webinar is going to be about tokenization and Web3. If you don't mind, we're just going to hold like 2-3 minutes because we have some attendees joining the meeting, and then we would start in a couple of minutes. You can see my screen, right, guys? Yeah. Perfect. So let's wait one more minute. I'm just going to be like just introducing a bit like Blockchain Málaga for all the attendees here today. So we are a nonprofit organization, and well, it's an association that is being created like some years ago. And what we tend to do is like we just try to get the attention, and we want also the society, to be educated in the ecosystem and also the new technology, and share all the advantages that we can offer, not only to Web3, but only to Web2. So it's quite important, just to being adopted, At the moment also we have like artificial intelligence, like quite important, but what is coming next and also the future is the blockchain and Web3. And it's basically like a topic that is mesmerizing me for many years. I'm going to be today your host and moderator for this session, and it's a pleasure to have you all here as we explore how blockchain technology is reshaping industries and unlocking new financial models and also driving mass adoption. So just to let you know a bit about myself, like I've been as a business development and market expansion like over 17 years for different companies. I've been living in the UK for over 13 years. And it's been like, I would say like 7 years ago, like I just started like being, having this interest in the Web3 and blockchain and crypto. And 5 years ago, I decided to jump into this amazing ecosystem. And like basically developing like business strategies for different companies, and also having a specialization in blockchain payments, and also how these could make the revolution. So my journey also includes like leading high impact initiatives at Bit2Me, which was my previous company. And at the moment I'm in Coinstore. So I'm just basically developing the whole full range of products of the company. So we have from listing, launchpad, market making services, wallet, payments, and globally. So I will do it like globally in a global vision. And also like being involved in different projects with Mercedes-Benz here in Spain with Bit2Me. So they've been adopting Bitcoin as a payment method, Toyota and BBC and other entities. So, at the moment, and my role here, I'm ambassador at Blockchain Málaga. And well, together with other colleagues, we just want to contribute the education, collaboration, and also innovation in the Web3 space. So, today's webinar, what we want to expect is like how tokenization is transforming traditional finance and also unlocking new opportunities across diverse industries. We want to talk as well about the future of fund tokens, and also how tokenized commodities like gold and silver are reshaping investments. I would like to introduce you to our speakers today. So we have with us Pablo Agnese. So he's a blockchain researcher and also professor at University International of Catalonia. And he's an expert in fund tokens and energy economics. And we have with us today Francisco Leighton. So he's a Web3 product leader and director. So he's been appointed at Aurus in the past, and he's having now his own consultancy. So he's specializing in tokenized gold and silver assets in decentralized finance and gaming. So quite interesting topics for today. I just wanted to let you know as well, because we have our colleague Ayub. So he's supposed to be here with us today He's the CEO and founder of Venture, and he's also a blockchain architect and NFT specialist, but unfortunately he's sick, so he won't be attending, but we wish him a fast recovery. So I would like to say also a special thanks to our sponsors. We have Territorio Bitcoin, which is a leading blockchain media platform that is supporting Blockchain Málaga. We have also Agencia Cum, and we have also as a sponsor Cointelegraph, which is one of the world's most renowned crypto new platforms. So let's get started. I'm gonna just stop sharing, and I'm gonna leave Pablo. So Pablo is gonna start sharing his screen, and he's gonna show like what he's doing exactly, and also the topic that he's gonna be in charge of. Thank you.
Okay, thank you, audience, for being around. Thank you, Rocio, for such a highly optimistic introduction. Really appreciate that. So my name is Pablo. I'm going to be sharing a few words with you guys in the audience. Let me just tell you who I am briefly and what I do. Let me just try to see if I can share this. Can you read the whole thing now? Can you see it full screen?
Yeah.
Yeah, great. So let's get into the nitty gritty. So as I was saying, I'm a trained economist. I've been into the crypto slash blockchain ecosystem since I would say 2013. I wouldn't consider myself an expert, given that the ecosystem is changing way too much and way too fast. I rather call myself like an enthusiast, so to speak. So I really take a lot of pleasure in what I do. I try to teach as much as I can in the classroom. I try to carry out as many research endeavors and projects that are given to me. And I try to preach as much as I can to evangelize when it comes to cryptos and the blockchain. I've been doing this since, as I said, approximately 2013, back in the old days. So today I'm going to tap upon a couple of things within this item here, research and projects. I'd like to share with you some little things, some failures that I'd like to share with you and try to give you some food for thought, as we call them, some intuitions. So let's get down to it. But prior to the real thing, I'd like to share a few slides with some context. I'm not sure about how homogeneous the audience is in terms of understanding the real extent of the whole ecosystem, but just for you to have a glimpse on this, if you go back a few years, back in 2010, there was this guy who actually bought this pizza for about 10,000 Bitcoins in the old days, the very early days of Bitcoin. Now you fast forward this to 2025, this is just quite a leap in terms of value. This is almost, virtually $1 billion, 15 years later. So this is quite a crazy leap in terms of value again, and not too much in terms of time. So just for you to get an idea of where we're at in terms of the evolution of the value of the Bitcoin, which is, as you all know, the major crypto asset in the whole crypto ecosystem. But the next slide here puts the highlight on the fact that we shouldn't miss the forest because of the trees. In other words, when we discuss cryptos, it's very easy to lose track of what we're really talking about, because in the end, as a colleague of mine here says, the price is very sexy. You kind of lose your bananas because of this. It's going up or down and in a crazy way. But again, what underlies the whole thing is the real technology, which is a blockchain. So we have thousands of cryptos, fluctuating up and down with a lot of volatility. But in the end, what really matters is the forest, right? It's not much the trees, right? So let me just give you more context when it comes to the whole market cap. That is the whole valuation of the crypto ecosystem. It's about $3.2 trillion. This is the American trillion. That is a 3 followed by 12 zeros. Just to get a ballpark, this is about 10%, 11% of US GDP, 9% of the US debt. If it comes to economies, you must know that it's only 5 to 7 economies, countries whose GDP surpasses the whole market cap of the whole crypto ecosystem. You must know too that in terms of dominance, it is Bitcoin that actually takes up the lion's share of it. It's about 60% of the whole pie. You know what they say, the one who actually hits first hits twice, and that's Bitcoin. So this is about 17% of the whole gold market cap. It doubles that of silver. By the way, silver's market cap is pretty much the same as Spain's GDP, just for you to have a ballpark. What else? In terms of the stock market, 2.6, 1% of the housing market, 4% of the money supply, you name it. The point is that, you know, the whole crypto market cap is not a trivial thing, not nowadays, not anymore. So this is where we're at in terms of numbers. So let me just focus on and zoom into the thing that I'd like to focus on, which is my research and my experience in terms of one particular project. Has to do with fund tokens, and later, if time allows, I'm going to share with you just one word on energy, which is something that I believe is going to, you know, skyrocket in the next few years. So fund tokens. What are the fund tokens? What do we care? Why should we care about this? Well, tokens are actually, it's kind of like a crypto with a limited, I would say, like a limited focus. You might say that tokens can be of a different nature. We're going to be focusing on the so-called governance tokens. Why? Because the idea here is to, you know, for instance, soccer clubs to delegate, say, to give away some of their responsibilities or their activities, to give them away to the real fans, to the fan base, to the supporters. So the idea behind these fund tokens is to increase the engagement between the clubs, the protagonists, and the fans. In other words, to make the fan base also a bit of a protagonist. You know, so just for you to know, there is one token when it comes to this known as Chilis. Chilis was first incepted by the socials.com platform that stands out at about $500 million, right, as a market cap, which is a non-trivial figure, I would say. But when it comes to the how much of a share these tokens, these fund tokens actually amount to in terms of market caps, is not really that much in terms of the club's revenue, right? It's actually much less than 5% of the total revenue that the clubs actually make in a year, right? We will see about this in the next few slides with just a few numbers. So the question I'll try to address here is whether these fund tokens incentivize real fund engagement, or is this just mere speculation? So this is the question that we're after. And I think the final outcome is going to give you some food for thought. Okay, so just bear with me. In terms of the context, let me just give you a few numbers. These are the major soccer clubs. See, for instance, Real Madrid, Barcelona. It's a bit outdated, granted, just a few years ago, but numbers are slightly above these numbers here. But the point I want to stress here is how much of the commercial share has gained in prominence in the last few years. It's almost, you know, it's the lion's share of the total revenue when it comes to soccer, revenue, right? And the point I wanted to highlight here is the fact that fund tokens will belong into this commercial sphere of the revenue as far as soccer is concerned. So it'll be a part of this, red-lined squared. Okay, so we're going to be talking about Barcelona, Manchester City, PSG, and Juventus. We're going to be focusing on these four tokens, these four fund tokens, and we're going to be trying to pick up the major drivers behind the volatility of these tokens. So let me just briefly tap upon the evolution of the price for these fund tokens in the last couple of years or so. Now, notice the evolution. It has become pretty much stable in the past few years. We had the World Cup back in 2022, perhaps a bit of a bubble back in the early days of 2022, and becoming more and more stable in recent years. But again, the point is to analyze the major drivers behind the changes, the ups and downs of these fund token prices for these four clubs, major clubs, that is. So what we're running here is a couple of studies. I'm not going to spend too much time in the technicalities. I don't want to share any equations, any high posh, fancy econometrics. This is not the place, I would say. But let me just share a couple of intuitions, perhaps, that will give you more context even to what I'm trying to achieve here. So the point is, we're going to be looking into some particular days, right, throughout the year. And for that, we're going to rely on one methodology known as event study. It is so called because you want to focus on a certain event. In our case, it's going to be the match days. But guess what? It's not only the local match days that we're going to be looking into, that is that of the local league, but also beyond that. That is to say, off match days, because, life already takes its toll during those days. Some things might happen. And also international competition match days that will influence the price of these fan tokens. So we're going to be doing this on the one hand, and then we're going to be running a few simulations. I'm going to share the final product of all this, some outcomes, very graphically, and some illustrations, so you will get the gist of it, hopefully. But also we're going to be positing this last hypothesis. At the bottom of this slide says there, we want to see whether the fan tokens are driven because of the emotional factor. In other words, because you're really a supporter of Barcelona, for instance, and you get into these tokens because you really feel it, or else because you want to invest in this, in these crypto assets. Which one of the two is it? Okay, so just bear with me. Next few slides will reveal the outcomes. So what we have in here is kind of like a graphical abstract. So the first image on top posits that it is fan sentiment that is driving the price, that is to say the volatility of fan token prices, the major ones, that of PSG of Barcelona, Manchester City, and Juventus. But what we pick up in the end is a funny piece of evidence, which is as far as the local match days are concerned, seemingly what we get is actually a negative return. Why is that? Well, what we could assume here is that it is because there is a lot of noise trading. In other words, it's not real professional, I would say, professional investors that are behind this trade, but actually it's more like real supporters that are buying and selling. And whenever you run into these match days, especially the local ones, you get a lot of fussiness, a lot of anxiety, possible injuries, so on and so forth, as to make for a lot of volatility, especially of the negative kind. So what we pick up in terms of the evidence, in terms of the result, is that there is a negative impact around these days, the local match days, as far as the price of the tokens is concerned. But guess what? The result is actually reversed when we focus on the events that had to do with international competitions. Why is that? Well, we submit that it has to do with the whole publicity that surrounds such events. So whenever you have your players going abroad and playing for their national team, there is something that has to do with the national pride or some big publicity going on as to affect the price the price of the tokens positively. So eventually what we end up with is this kind of two-tier outcome. On the one hand, local matches tend to affect the prices negatively, whereas international competition match days tend to affect the price of the tokens positively because of this, international publicity kind of thing, right? Whereas for the local match days, it's more like the noise trading that takes a grip on the whole ecosystem, this kind of niche, so to speak. And in terms of the simulation, what we pick up is something that is really perhaps intuitive, which is what we see is that it has to do with the emotional factor rather than the speculative kind of long-term crypto ecosystem kind of thing. So in other words, you tend to buy Barcelona tokens because you really feel it. You are emotionally driven and you want to support your team. It's not because you want to buy cheap in order to sell pricey in the long term. So nothing to do with that. Let me just skim through this quickly. What we have in here is the evolution of Bitcoin on the left, and the evolution of the Chile's token on the right, along with a simulation. The red line is the price as fixed to an initial sample a day. These are the days of the World Cup. So what we're doing here is we're holding this variable constant as to see what's going to happen with the token price in the end. So we're focusing, for instance, on the Barcelona token and its price. So what we're getting here, I just wanted to focus on the blue lines. What we're saying here is that the contribution, just focus on the right-hand side picture now. What it says there is that there is a huge gap between the blue line, which is the real price of the Barcelona token, and what the price would have been, which is the red line, assuming that the Chile's token had remained as high as in the previous picture here, the previous figure, as high as this. So if we hold this price of the Chile's token constant at a high level, what we could have gotten is a higher valuation of the Barcelona token. In other words, so let me just put everything in a nutshell. What we're saying is that the contribution of the Chile's token to the volatility of the Barcelona token is really significant, as given by the huge gap between the two lines, the red one and the blue one on the right-hand side of your screen. Whereas on the left-hand side is the contribution of the Bitcoin, taking that as the speculative driver. So it's not much of a thing. You know what I'm saying? So the point again is try to highlight the fact that it is the Chile's token that is driving the volatility of the Barcelona token. In other words, has nothing whatsoever to do with the speculative motive of, embedded in the crypto ecosystem. Rather, it has to do with the fact that you want to buy your way into the tokens. You must know that the Chile's token is what you need to buy if you want to buy the corresponding tokens for each one of the clubs, the soccer clubs, that is. Now, let me move on into something slightly different. This here was my idea, our idea here at the university level, to bring the tokenization into the university sphere. By the way, I got to tell you, the spoiler is that we completely failed when it came to this. Still, I want to share with you because there might be some food for thought in here that you can might come in handy for you and your experience, right? So we call this the SPORTCADEMIC project. Actually made the cut for one funding for the Stellar community. Perhaps you know that Stellar is a very well-known blockchain in the ecosystem, among the top 10, top 12 cryptos and blockchains in the community. Made a first cut, but didn't secure any funding eventually. So if any investors are available in the audience, just feel free to draw me a line. I'll be happy to answer all your questions. So the idea here was to as I was saying, try to bring in the blockchain into the university sphere. The idea was to tokenize student athletes. Why is that? Well, because we feel that there is a huge market niche, right? We have a lot of sportsmen and women that would like to see themselves, progressing in their scholarly life, along with their professional lives when it comes to sports. So you must know that, for instance, in here we have many students that actually happens to compete at the highest level, Olympics and whatnot, but they cannot secure their funding. So the idea behind this project was to bring together, on the one hand, students that will try to get some funding. On the other hand, the university that will be kind of like a filter upon which you would like to lay out an NFT marketplace where you can sell these tokens, where essentially what you're doing is you're showcasing the abilities, the skills, and the records, that is to say, the academic records of the students. And along the way, we're going to be bringing in the so-called sponsors, also known as angel investors, that will gladly and hopefully chip in as to be able to, stick around and be able to claim in the future that they've been around when they were needed. In other words, let me just try to rephrase this by way of an example. Suppose that you were able to go back in time and just stand next to Lionel Messi back in the day when he most needed all this, growth or hormone medicines. Wouldn't you pay what you don't have right now? Wouldn't you just put up with everything just to be able to say nowadays that you've been there when you were needed? How would that actually impact your brand image nowadays? This is, again, the idea behind the project. So the idea is to make investors to go for the long haul, the long journey along with the students, athletes, and stay around. So to create this kind of rapport. Okay, so moving on. 3 roles. We have university, students, and investors. They will get together. Ideally, you will sell these tokens that will contain a certification of all the academics, all the records, both sports related and scholarly related. And investors will try to chip in and fund these students because they want to buy the token as to be able to certify in the future that they have been around when they were needed. Okay, that's the whole idea. Why did we fail? Well, ideally, we want to offer a win-win-win. That is the point. Students will be getting the funding, university will be getting perhaps a little share of the transaction, along with larger enrollment numbers, and investors will be having this certified proof upon the blockchain, saying that they have been there when they were needed, right? Now, why did we fail so far, I would say? Well, because maybe not everything should be put upon the blockchain, right? Remember that the blockchain is like this kind of intermediary, this kind of soft intermediary, a very transparent intermediary that allows you to do a lot of things, but maybe this was not one of them. Perhaps we didn't actually sell it as we should have. Perhaps the market was not ripe enough at the moment. But the point is, it was tough to try to reach out and try to secure any funding as yet. Okay, so this is very much it. If I have a couple of minutes, I would like to wrap up with a couple of slides. Do I have a few more minutes to do so, just to wrap up? Yeah, okay. I'm gonna shift 180 degrees now, and I'm going to offer two last slides about energy. Why I think this is the real thing in the next few years as regards cryptos and the blockchain. Why is this so? Well, because you must know that there are many countries in Asia, especially in Southeast Asia, that want to catch up. They want to, see their living standards increasing up to the level in the West. Therefore, they're going to be demanding a lot of energy, right? So energy will be in very high demand, and arguably many a metal will be increasing in their price, in their production, and also in the energy that is therefore needed for the extraction in most of these cases. This slide here just give you like a ballpark on where Bitcoin stands in terms of the energy use as compared to copper, lithium, gold, and iron. Notice that is somewhere in between, say, perhaps copper and perhaps iron, right? Again, this is a bit outdated. Perhaps this is not like this. It has changed slightly, going upwards, I would say. But again, it's not trivial, the amount of energy that we use in order to mine Bitcoin and any other crypto. In terms of the whole map of energy use, if you were to consider Bitcoin and Ethereum a country, they would stand at place number 23, if I see it correctly, right? About there. So this is a small share, but again, it's not a trivial one. It's about South Africa, what they spend in energy use. So this is important. This is a non-trivial number, okay? So we're going to be using a lot of energy in the future. We're going to be using a lot of energy to mining the next cryptos and to maintain the whole ecosystem. I would say that one milestone that has been achieved in the past few months, I would say, is the announcement by the U.S. government to try to implement the reserve fund in crypto denomination, in particular in bitcoins. They want to buy as many as 200,000 a year for the next 5 years. This will amount to about how much is about 5% of the whole total supply. They want to do that because they want to underpin the dollar. The dollar is kind of losing strength, losing inertia, so to speak. So they want to underpin their currency. So this is pretty much like going back to the gold standard. So, and I see Bitcoins like kind of complementing gold at this point, in the sense that they might become a reserve for these central banks in a way. Now, the last point I would like to highlight, and I'm wrapping up with this. If you see this picture ever, right, you know what I'm talking about. We call this flaring and venting. This is what the oil companies or gas companies had to rely on in order to release all these gases out in the atmosphere, because they had to extract all the oil out of the earth. Now, as you might well know, this can be a pollutant, but you must know too that in some places like Argentina, they've been using this gas that is released into the atmosphere. They're trying to recycle that as energy as to produce new cryptos. And so far, the beta projects that they have been carrying out have been shown to be really efficient, because not only have they decreased the impact in terms of the carbon footprint, but also they have increased their production of oil, while at the same time they're mining new cryptos, new Bitcoins. So this is quite a win-win as far as I can tell. So this is a wrap. That's it. Thank you very much for your time. I yield to you guys. Thank you.
Thank you so much, Pablo. It was super interesting. Well, thank you for sharing all your knowledge with the audience. I'm just gonna ask, the attendees, if you have any questions and you want to leave it in the chat, then by the end of this session, we can go through all this. But I just wanna ask Pablo, just to understand, what were the key lessons learned from the SPORTCADEMIC project regarding blockchain-based athlete funding?
Yeah, I think that one of the main lessons learned is that you got to know whom you're talking to. You got to try to find the audiences to optimize your resources and try to reach out in a very optimal way. Maybe this has come very harsh on us to some point, the fact or the realization that maybe not everything has to be taken into the blockchain. You see, to us, it sounded like it was the greatest idea, try to tokenize student athletes. Maybe still is, right? But we got to sell this product in a different way, as far as I can tell. Okay, maybe it's about information or securing the information in the blockchain. What really matters, it's not about a token that an investor will store for himself or herself in the future as to boast about having it. Maybe it's about securing this information and be able to somehow showcase it in a different context. Again, try to reach out to optimize resources and to reach out to a better audience. To try to be able to reach out to a good audience, someone who is willing to listen to what you had to say and maybe modify your message. I mean, it's been really, realized that there was no one there on the other side that wanted to invest in this was really quite a shock to me. But we had to change the message somehow.
Yeah, cool. I mean, that's very interesting. And regarding fan tokens, do you think can they be reliable in a long-term investment, or do you think they are more of a speculation tool?
Well, time will tell. But as I was saying in the first slides, soccer teams need funding, and the major share of income as of now for clubs, soccer clubs in particular, happens to be the commercial side, the commercial sphere. So anything that goes beyond the match day, anything that goes beyond the traditional broadcasting rights. So they would like to tap into this ecosystem, because guess what? If they don't do that, somebody else will, and then they will have the edge. Chinese soccer teams will tap into this. So you want to get your feet wet, so to speak, and be the first one doing it. Time will tell. We're still not ripe. The numbers are still not big numbers. I would say it has to do with the fact that the ecosystem is not as user-friendly as sometimes we're typically led to believe, and it has to do with that, adaptation and use. Many users happen to be very young users, naturally so, but you want to reach out to a larger audience in the end.
Yeah, I mean, it's true that it's increasing quite a lot, especially in Asia. Yesterday I was having a conversation with West Ham United, also just to do something with CoinStore regarding the fan tokens, and we were just looking at the percentage of users, and they mostly coming from Asia. Even it's Premier League, it's kind of interesting, how they adopted.
Yeah, and it's not only traditional sport, but also virtual sports. Virtual games. They want to get into that. As a matter of fact, there are some clubs, some teams who happen to have a token already. So
yes. Cool. Okay. Thank you so much, Pablo. And I'm gonna pass now this presentation to Francisco. So he's gonna give us an introduction and share more knowledge about precious metals in Web3. Thank you. Can you see? You can see the screen, right?
We can. Yes.
Yeah.
I can see the screen, Rocio. Just a question. Should I click to change each slide, or would it be better for me to share the presentation?
I'm not sure if you can share directly yourself. Otherwise, I can just do it from here. Let me see. Is changing?
It's changing.
Yeah, I can just go back to the.
All right. So I'll let you know when we move from slide
Yeah.
to slide.
Thank you.
All right. So hi, everyone. It's a big pleasure to be here with you and alongside reputable professionals such as Pablo and Rocio. Today, I'd like to share with you my experience in the tokenization of real-world assets, particularly of gold, and show you some interesting use cases for this metal in Web3, in the crypto market. My journey in crypto started back in 2016 as an investor. I was captivated by Bitcoin and all the possibilities that it offered, the scarcity, the decentralization, and the capabilities of store of value. And that made me want to learn more about the industry. And after I completed my MBA in the Netherlands in 2019, I knew that I wanted to work in this industry. So I started applying to different jobs, right? And I began working in the industry when I joined Orus, a blockchain company that facilitates the tokenization of gold and silver to bullion refineries and brokers from the traditional market. Not only enabling these entities to mint gold-backed tokens, but also to open new distribution channels and to generate new use cases for these metals that were not possible with the physical assets themselves. Thanks, Rocio. Well, at Orus, I was in charge of leading both product development and also partner onboarding. And I had the chance to build interesting products around tokenized gold, such as our tokenization platform, which enabled businesses to mint gold-backed tokens using a framework, of course, that we created. Once we built up our community together with our partners, we decided to launch a friendly mobile app to create a wallet to store, receive, send, and swap tokens, plus some staking possibilities for the utility token that we had for our ecosystem. And during 2024, we launched our dashboard, which consisted of a web application that enabled users to interact with their tokens and other protocols in DeFi. And we launched our NFT minting platform for brands and entities to create their own gold-backed NFTs. I had the chance to close significant deals at Orus, which evolved into successful business cases. We onboarded Aurica in Chile. It was the top broker of the country who started selling gold-backed tokens in the region and also added liquidity in our DeFi pools. We created a strong partnership with the oldest and largest refinery of Spain, SEMSA JP, who alongside their client CIODE, the top broker of precious metals in Madrid, decided to tokenize both gold and silver bars and started selling these tokens across Spain and Europe. So here we can see real-world examples of companies that adopted and leveraged the tokenization of assets such as gold and silver. Well, there are probably several Bitcoin lovers here, just like me and all the other speakers in this event. But what none of us can deny is that gold has been the oldest and most reliable store of value for the last 2,000 years. With a current market cap of almost $20 trillion, gold has been appreciating significantly over the last years due to geopolitical events and also due to quantitative easing or money printing, proving to be the hedge for market uncertainty and volatility. Its properties and qualities inspired multiple aspects of Bitcoin, such as its scarce supply, its decentralization, and also the cost of production. However, unlike Bitcoin, gold is the store of value of the analog world, with several limitations for both entities that produce it and sell it, but also for those that invest in it. Gold has several strengths as an asset. As mentioned before, it is the go-to store of value for investors. It has global liquidity and acceptance. It is the perfect asset to diversify portfolios due to its low to negative correlation with traditional markets. And finally, it is also tangible, which is very important. People or investors can touch it, can feel it, can hold it, and even can melt it for other use cases. But it also has its weaknesses. Gold is bulky, making it very hard to move, transfer, and even sell it. It requires physical intervention to move it across space. On the other hand, it has high storage cost, and it works as a buy and hold asset that generates no yield. Well, with blockchain technology, not only we can digitize gold, removing most of the physical drawbacks of the asset, such as transferability, divisibility, and capabilities to store it. Now we can merge the stability and the security of this asset with the endless possibilities of digital tokens. By being represented in a token format, gold can navigate through new markets and web applications. An asset that has commonly been stored at vaults, gathering dust and serving as a buy and hold, can now enter the digital economy, leveraging the endless possibilities that exist across Web3. We can create digital products using tokenized gold as a base. We can generate yields. Now we can back certain digital assets with gold and even build more use cases for this metal. Well, this part is quite important. Most of us here have lived and seen multiple bear markets in crypto, price crashes, and all sorts of scams. These issues have significantly damaged trust in digital assets. As an example, just look at NFTs and meme coins. Many dropped in value by 80 to 90% in the past months and years. If you'd held to a token that crashed, know that you are not alone. I've been there too, particularly with a meme coin. So a key problem in the market is that many assets lack real-world value and utility, which leads to massive price drops when the hype fades. This not only hurts investors, but also impacts the entire crypto industry. Even solid Web3 companies with great products, communities, and loyal users aren't immune to this. Their tokens still suffer during market lows, affecting their brand reputation, their operations, and their entire ecosystem. What if we could help some of these Web3 companies and investors by anchoring certain NFTs or tokens with gold? Imagine a brand or an entity that would like to launch its token or certain digital collectibles with real utility, which might give you access to raffles, prizes, and unique experiences. But the brand is worried about how the market volatility could affect the asset's price and impact negatively on its community and also on its brand reputation. Well, a concept that we introduced at Horus and that got positive feedback from different Web3 partners is enabling them to back their NFTs or ecosystem tokens with a portion of gold. Think of a company wanting to launch an NFT or a token priced at $100. To instill confidence and stability, the issuer can choose to back 50% of its value, meaning $50, with tokenized gold. This approach establishes a solid price floor to the asset, ensuring that no matter how the market fluctuates, the value of the token won't fall below the gold backing value. In a scenario where the token's price drops or the utility ends, holders have the reassurance that they can redeem 50% of their initial investment in gold. So this setup not only provides a safety net, but also maintains the element of upside potential. Investors can still speculate on the token's future gains if the company does things properly, right? But with the security of knowing there's a tangible asset behind their investment. This approach leverages real-world assets like gold to mitigate some of the risks in the crypto market, offering a more robust insurance against the volatility and the uncertainty in Web3. So by integrating real-world assets in this way, we offer companies and their users a powerful tool to enhance the stability and trust in the digital assets that they're going to launch to the market. As mentioned in the previous slide, gold can play a significant role in the NFT market, particularly for brands that use this for loyalty programs. We've seen how legitimate collections from top brands such as Louis Vuitton or Starbucks have dropped in price over 90%. By attaching a portion of tokenized gold to their assets, brands can now bring more legitimacy to their collection and protect both their customers and brand reputation. Imagine you're an NFT holder who decides it's time to move on from your digital collectible. With tokenized gold as part of the NFT structure, brands can allow you to burn this NFT and redeem the gold that is backing it. This mechanism could ensure that you can exit your position with a value that is secured, regardless of the market price of the NFT. This strategy doesn't just protect the holder's investment, it also strengthens the credibility of the brand. The utility of gold is getting another major upgrade with DeFi. Traditionally, just buy and hold asset, gold can now actively work for you, similar to a fixed-term deposit. Thanks to borrowing and lending protocols in DeFi, you can lend your tokenized gold to earn a yield. And even better, you can use your gold as collateral to borrow Bitcoin or other tokens. This opens a whole new world of financial possibilities, transforming passive and what some consider boring gold into an active income-generating asset. And one of the last use cases for gold, which is coming in the near future, is its integration with both traditional and blockchain games. Gold has always played a key role in games, whether it is to make in-game items special, such as a sword, or used as rewards or point mechanism. We will see gaming companies integrating real-world assets, such as gold, into their gaming economies very soon, where the golden nuggets you earn in a game will actually be backed by real gold and have value that can be exchanged for dollars, euros, or even other cryptocurrencies, or also used to purchase other items within the game. Eventually, even these items within a game, such as a gun or a sword, will have real value by being backed with tokenized gold. So as we see, the possibilities are endless. And now that you've heard about the different use cases for gold and in its tokenized form, I'd like to share some key closing thoughts with you. First, we'll see that tokenization is a golden opportunity for the commodity to be used and adopted by new generations. All of this by integrating the asset into new markets where youngsters are highly active and engaging, such as gaming. Thanks to DeFi and other protocols, gold will evolve from a buy and hold asset into a yield-bearing commodity, becoming much more appealing to investors. We'll see that the opportunity cost of not tokenizing will be quite high, meaning that we will see a new trend of traditional bullion companies, such as refineries, brokers, banks, jumping to the tokenization train by tokenizing part of their gold reserves to generate new value, even a yield, and access new audiences. And finally, as we've seen with the case of Fort Knox, that they want to audit in the US, it'll be key to ensure the authenticity of gold and that custodians are transparent with the storage of these metals. And that will be something very important to get adoption from users, earn their trust, and to achieve mainstream adoption. So thank you very much for your attention, and I hope I could give you a new perspective about gold and its role in Web3.
Thank you, Francisco. I have some questions here. So for you, Pablo, like how do you ensure the authenticity and stability of tokenized commodities like gold and silver? Like how do you ensure this?
Yeah, that's a good question. So we did, to ensure the authenticity of tokenized gold and silver, it was first of all key to work with reputable companies in the market who are tokenizing the metal. For example, Asemsa JP. Also, at Oros, we implemented strong KYB and due diligence processes so that we ensure we were onboarding the right partners. And we only accepted LBMA certified gold to be tokenized. Also, we collaborated with traditional and also pretty well-established custodians such as Brinks and Malka who ensure that the asset is always properly held and reviewed on a monthly basis. And of course, you need to involve different auditors so that you can prove to people on a yearly basis, depending on the capabilities of the company, that the assets are held. Authenticity of gold is quite a big challenge, and is something that in general we'll see that is going to be something every company will have to tackle when tokenizing gold. We've seen that there were some reserves stored in the Bank of England that were not actual gold, but were iron bars, right? So that's something that we'll have to eventually be more transparent and use more technology to prove the authenticity of those assets. Yeah. At the end, there's always going to be a challenge when there can be human intervention. And that's the beauty around Bitcoin, right? That everything that it happens around it doesn't need a human to be there. And regarding the stability of the assets, that the most important thing there is liquidity. So you need sufficient liquidity in the crypto market to ensure that large transactions such as a sell order that do not mess with the price and avoid slippage. We always want to keep the price of the token attached or pegged to the spot price of gold. And that comes only with sufficient liquidity. Okay, thank you. Makes sense. And I have more questions here in the chat. I'm not sure if you're seeing, guys, but I just let you know because there is one for Francisco. Is there a trend on tokens being Bitcoin backed, similar to gold backed tokens, or the gold backed is popular because of tradition? That's a good question. Yeah. I'm not aware at the moment that there are assets in the market backed by Bitcoin, but that surely is going to be a trend, particularly with what will be going on with hybrid tokens, where you will be able to create baskets of different assets into one token, similar to funds that we know in the traditional financial markets. So I'm sure that's going to be only a matter of time until that happens. But I'm not really aware of an asset that is particularly backed by Bitcoin yet. But it's a very interesting concept. Thank you. And I have another one for Pablo. I'm not sure, Pablo, if you managed to answer this one, but I'll let you know. Also, crypto adoption will make it easier for projects, as the one Pablo was developing, to be more fruitful in the future. I feel like the crypto market is still pretty reliant on bullish, bearish cycles. So what do you think? That's for you.
Well, I just left my feedback right there in the little window. I don't know if you guys can read it. What I'm saying here, actually, I'm just reading out loud what I just wrote. Okay, it says, what I'm saying is, that's a very good point. And indeed, the price is still a very sexy kind of thing. But my point is that the ecosystem has intrinsic value. The point is that we're not seeing it yet. Ironically, we're going to have to see more projects built upon the whole set of existing blockchains that are available to us. Once we get to see the social value we're adding by means of this technology, we're gonna stop thinking about the price of such a thing as Bitcoin. In other words, we're gonna look past the tree, right? That's what I'm saying. That to me, it's a huge announcement and a kind of like a game-changing milestone. What the U.S. government said a few weeks ago about creating this kind of reserve fund exclusively denominated in BTC, right? Because it's a paradigm shift. We got to be thinking about fixing the value of the dollar to something else, and that something else might as well be cryptos. Used to be gold. Maybe gold is back. maybe it'll be just a composite of all these assets, as to have like a kind of like a basket that will underpin the value of so-called fiat monies and, you know, currencies that you exchange on a daily basis and that you need to accelerate the flow of trade, you know.
Exactly. Yeah. Thank you, Pablo. So, well, I'm just gonna introduce about my topic. As I previously explained to you, like I've been working in exchanges now for almost 4 years, and coming back from the fintech industry, traditional payments like Fondi. Fondi is like a competitor of Stripe for the ones that are not familiarized. So we were just basically building a pipeline of potential clients, outbound, inbound, developing new strategies, and also doing market expansion. Then I jumped into B2Me. So I was basically opening the business development department for payments. So we used to have like B2Me card, which is a card that they still have with MasterCard, B2Me commerce, the payment gateway for crypto, so an alternative payment method. This is where I meet Francisco. So it was like some years ago. I still remember with SEMSA. I think it was with SEMSA. Yeah, so we were having the call and just introducing the product. So it was very, very nice. And well, I just moved into Coinstore as a consultant like a couple of months ago. And as I just mentioned before, it's one of the largest centralized exchange in Asia. We have over 10 million users, and well, we have different products that I would just jump on. But yeah, I wanted to let you know that I've been involved with global companies. I work also for Tata, Indian Travel Corporation Asia, or TTC, which is also based in the States. So I have this overview of how global markets work and how you have also to negotiate with them, because obviously the business strategy, it might vary depending on the culture and depending on the region. So that's something that I like to point out here. Just being, let's say, attached to the topic today, you know, about the real world assets. I just wanted to let you know, like, how to list a real world asset token on exchange, as it has different way of doing it, you know, because of the specific token that we've been discussing today. So in this slide, you could see like basically the steps, you know, that we need to follow when we talk about listing a real world asset token in exchanges. So either they can do it like in centralized exchanges, or it could be also in decentralized exchanges. I'm just gonna go through the different steps and then also explain you the advantages or disadvantages that we have depending where we are listing those tokens. So the step ones, especially also in Europe, is ensure all the regulatory compliance. So real world asset tokens, they are tied to physical assets, like we were discussing before. Could be also real estate, bonds, equity. And in here, like, compliance is crucial. So we need to take into consideration the legal structure and jurisdiction. So depending where this regulation is identified, then we need to follow all the jurisdiction. For example, in the European Union is ESMA, in the States is SEC. So we just need to follow those regulations. Then we need to look at the security versus utility token classification. So we have to determine whether the tokens qualifies as a security token or a utility token to comply with all the financial regulations. Obviously, we need to go through KYC and AML compliance. So many exchanges, they require projects to follow the KYC, know your customer, and also the anti-money laundering. So that's something very important. And then we have also to look at the asset tokenization model. So we need to ensure the underlying asset has legal backing, proof of ownership, and also valuation transparency. As also like my colleagues today, they were discussing, you know, about the transparency in that. The second step that I would like to mention here is choose the right blockchain for tokenization. So as some of you know, like, select a blockchain network that supports smart contracts, compliance tools, and also token standards. For example, we have Ethereum, which is mostly used for security tokens. We have Tezos that it could be used for compliance features. We have also Polkadot and Avalanche for high speed and multi-chain capabilities, or Stellar, which is used mostly for stable coins and asset tokenization. So we just need to choose the right blockchain. And also use, well, security token platforms like Securitize, Polymath, T0. I mean, there are many, so that's something that's obviously we have to look at. The third step here is select an exchange. So as I was mentioning before, like we have the centralized exchange like CoinStore, Binance, Kraken, where, you know, normally they have more liquidity, credibility, and they have also more investor confidence. But they also have requires extensive due diligence, listing fees, and also marketing commitments. While on the other hand, we have the decentralized exchange like Uniswap, PancakeSwap, and Curve, among others. And these ones, basically, they are more flexible, they have fewer restrictions, normally lower costs, but they require liquidity pools to support trading pairs. So, for example, like steps to list in a centralized exchange, I mean, we have different steps. So normally we have to prepare the white paper and business plan. They have to submit as well a listing application, for example, in Binance, listing on Binance application. Then they have to provide compliance and legal documents like proof of asset, smart contracts, and they have also to pass the technical and liquidity requirements, and obviously marketing and community growth. So that's normally for centralized exchange, the steps that we have to follow. And then for DEX, they are completely different. So they have to create a liquidity pool, pair, for example, with Ethereum, USDT, USDC, also native tokens to enable the trading, and then set trading fees, conduct an audit, and promote and market the token, you know. So normally by the use of decentralized finance aggregators like CoinGecko or DEX tools, which they help to gain exposure, you know, that's something to look at. Then the step 4, we have to secure partnerships and build market liquidity. So we do that through market makers and also institutional backing. So working basically with real world businesses, you know, like private equity firms or also funds, and obviously community growth. So engage with the different social media channels like Twitter, Telegram, Discord, to build also a strong investor base. And step 5, here I pointed the execute strong marketing and PR strategy. So getting featured on crypto media like Cointelegraph and CoinDesk, and for example, Territorio Bitcoin. And also engage with different influencers or KOLs, promoting via YouTube, for example. Normally like tending to host AMAs, Ask Me Anything sessions to build trust with potential investors, and in terms of decentralized finance and staking incentives, like, well, offering rewards, no, to liquidity providers. I mean, just wanted to share with you a bit of CoinStore, which is at the moment where I am. So that's a centralized exchange that was founded in December 2020. And we basically have around 300 plus employees in worldwide, but mostly I would say 250, they are based in Asia. So we are now expanding in the European market, and obviously just getting to promote, you know, the company in Europe more. It's very large in Asia, but, you know, still we have like 10 million registered users in more than 175 countries. We work quite well with emerging markets, which I'm gonna go through different insights with you shortly. And we have teams in different countries like United Kingdom, India, Dubai. There are many in Dubai, South Korea, Indonesia, so all Asian based. In terms of products, we work with spot trading, over-the-counter services. We have Launchpad, wallets, staking. We do contracts. We do also like personalized blockchain projects. And we have, we have this range, of these digital assets, financial services to engage with the community. So that's the company, like how it's segmented. So by 2023, we have around 150K daily active users. We obtain different licenses in 3 countries. And then by 2024, we just increased the users by 500K, which is quite a lot. And then we have over 2,600 projects that we service. And by 2025, we just increased the registered users by 20 million, 1 million daily active users, and the projects, they increased to 3,800. So we have now licenses in over 20 different countries. So we definitely are expanding. And as I say, we are the top one in Southeast Asia. We also, we are not only doing like all the exchange services that I mentioned before, plus we are also hosting a series of events where we partner with different companies. So for example, this year we have the Token 2049, and in Dubai, we have a strong presence in Dubai. So we are also sponsoring with other companies. We just share the cost, and then we just share the stand, and we have different, let's say, exposure, with the partners. And we've been also quite big in Singapore at Blockchain Fests, and also some Blockchain Expo Global in London and in Amsterdam as well. So we just kind of also attending all these events worldwide to increase community and engage with the audience. In terms of average daily trading volume, well, that's the volume that we have in January, which is quite high. It's 1.2 billion. And that's something that is, increasing. And I just wanted to check with you as well, to show you how the global expansion is. So why are the emerging markets crucial for crypto? We can see here, we have emerging countries like India with a 20%, Bangladesh, 17%, Pakistan. And then we also have the top countries operating with us, which are Indonesia and Vietnam, which they are not in the emerging countries there. But they are, for us, they are crucial, the emerging markets, because of the financial inclusion. So we have millions of people in these regions lack access to traditional banking. So they're making crypto a vital alternative for payments and savings. That's why it's growing quite in consideration. Then we have payments as well. So crypto offers faster and cheaper cross-border transactions. We have internet penetration. So with a mobile-first user base, crypto adoption is seamless and also is growing rapidly. And inflation and currency devaluation. So those countries that they are experiencing economic volatility, they are turning to crypto as a hedge, against the inflation and currency instability. In terms of our partners, we have different partners, like the ones that you can see here. So we are expanding our global footprint, and we collaborate with top industry partners like CoinMarketCap, CoinGecko, Nomics, that they normally increase market visibility and accessibility. Then we have Bitcoin and Merkle Capital for blockchain ecosystems, and we have Fairy Proof and FIO to ensure security and compliance. So we have this variety of partners, that they are giving us also strength and to develop stronger within the ecosystem. That's from my side, just an overview of CoinStore, because I know also many people here in Europe, they don't know them. So yeah, just to have another exchange, centralized exchange, following the regulation and based in Singapore. Thank you so much. I'm not sure if there are more questions in the chat. I don't think so. I'm just gonna leave maybe a couple of minutes. I'm not sure if someone else has something to comment, guys, or if you have... It's 5:10, so we are a bit early, but it's okay because we don't have Ayub today. So for the next one, he could share, Ayub was gonna discuss about blockchain and how to create the blockchain from the scratch as a technical point of view. So I think for the next one, I'll have him on board. Thank you, Pradeep. Okay, I think, yeah, I mean, if anyone has more question or they want to connect us through LinkedIn, just feel free to send us a message. And yeah, thank you so much, guys, Pablo and Francisco. It's a pleasure. Let's grow the community.
Thank you, Rocio, for the opportunity and everyone for your attention. It was a pleasure to be here, also sharing with Pablo and everyone. Thanks.
Thank you.
Thank you, guys. Been a pleasure. Take care.
Thank you. Bye-bye.
Bye-bye.
I think that's okay, no?